Hello, everyone, and welcome to another backtesting session with Ben and Roman for the smart money concept. Let us know if you're here in the chat, how you're all doing. Have you done some more backtesting? Are you still excited about the Jupiter backtesting session with 21% that we had last week? Let us know. Yeah, as always, like and subscribe to the channel. It really helps us out. And with all the necessities out of the way, let me say hi to Roman, who's also here on the chat. How you doing,
Hello.
Roman?
Hey, I'm doing good. How are you?
Yeah, I'm good. I'm excited for a backtesting session. I mean, let's see if we can do more with it. It was such a good session last week. So, yeah, excited for this one. Let me just pull up the chart. Where are we? There we go. Got the nice chart on the screen.
You seem to have some extra drawings there.
Oh.
Maybe you can remove them.
Yeah. It's not supposed to be here. Remove drawings. Start fresh. Yeah, so Roman said to me, he asked me, did you check the market from Jupiter, see how it ended? And I said, nope. So he said, can we do a continuation of Jupiter? And I said, yep. So here we are back in yup. Continuing with the backtest.
Yeah, I don't know if you've seen this, but I posted like the process of like basically my thoughts on how I opened the position on Jupiter that I shared on Discord.
I didn't even see that.
Oh,
So
that's a shame.
Why? Was that a spoiler?
No, I mean, I tried to come up with really like detailed explanation on the thought process that I had opening the position. So yeah, it's very useful for anyone who's studying smart money. So I recommend you to check it. It is on our Discord.
All right. Do you want me to do that now, or
It's up to you. I mean, you can do it later.
see if I can load it up? And also in the meantime, let's say hi to Kurt, Hans, Quinley, Dimitro, Heidi, and Johnny. Nice to see you all here. If you're silently watching, which I know you are, just don't be shy. Get onto the top top chat people, top supporters, top fans. It's always nice to interact with our audience. Discord is loading. So on Discord, it was in the smart money concept channel.
It's Profit Showcase.
Profit Showcase. Oh, wow. You actually made profit. Let's see. I need to make this one not full screen. And then I can get that in. You've made a review. Okay. So you even have a notion for it. Wow. So this was the liquidity sweep.
Yep.
Closest target is the fair value gap. So this is the replay of what we did last week, or?
No, it is basically what happened like last week on the live market. So not the replay.
Oh, but do I want to see this then? Because I'm going to be doing the...
I mean, it's the end of July. I don't think that you'll get there.
Oh, end of July. No, we won't get there yet. All right. Fair value gap. Step 2, daily swing. Yeah. Weekly fair value gap, it was entered. There's another daily swing lower. First shift happened on the 4-hour. Nice. That's a confirmation of potential reversal. So you'll be looking for shorts. Okay. Daily fair value gap. That's this one. You're waiting for 4-hour fair value gap, daily fair value gap. Daily liquidity was taken out. Weekly was fulfilled. Daily. Oh,
It's at
this
the
week.
bottom.
Yeah. Did you enter it already?
No, I missed this one.
Okay, because this would have been a good entry, right? Somewhere here.
Yeah, I just wasn't sure at this point, so I wanted to wait for 4-hour shift.
I see. But nice move to the downside and then a recovery into fair value gaps. So you took a position here?
Yeah, there was a position.
So that would be another short?
Yeah.
Open short. Okay, going down. Did you get stopped out?
Mm-hmm.
That's too bad. It went back into the inverse fair value gap. Shift happened. You got in here. Nice. 6 risk reward ratio. You daredevil. You daredevil. What happened to the rule of sticking to 3?
It's at least 3.
Oh, at least 3. True. And which point of interest did you use?
It's the closest swing on the higher time frame.
Oh, okay. You just ignored all the fair value gaps in between.
Yeah. I mean, I had the bearish bias because of the weekly time frame.
Oh,
So,
I mean, yeah. It looks like it's moving there. And you wanted to get another short. Pure greed. But hey, if it works, it works.
yeah, that's the order flow. It's not the greed.
Increased from 5.2 to 6. Both close. Nice. So, yeah, short here. Continuing to hold here. This requires some mental strength. I can tell you that. Getting there, opening another position, perfect. I'd say. You're using the fair value gap entry.
Yeah, there was like a small fair value gap.
Yeah, I can see that. And then another short down to the target. Lost 1%, won 10.5%. That's what we like to see. Nice. That's a great analysis. Let's see if we can replicate that today with the backtesting. All right. So if we were remembering from last time where we were, what do we have? We have a monthly target like that. I'm a bit annoyed that we didn't save the drawings, but I suppose we could just create them quickly. It's not that.
Yeah, but you didn't have any, like, historically, you had some for the future for some reason. I don't know.
Hello, Ferry. Johnny says, I fell off the wagon for a bit because I could not get the rules for the strategy working for me, but another day. Well, Johnny, hang in there. You can get there. And also, we have, this is of a series. If you go to the live stream stuff with the backtest or with the smart money concept, you will see the beginning as well. So you can go over that and over that and over that until you get the rules of this strategy. It's clearly explained per step. So we explain every little detail of the strategy itself. And maybe you're already familiar with it. I'm just saying it for the users that aren't yet. Let's see. Kurt says, could you please show me your smart trade presets for both long and short setups? I'd like to understand how you structure your entry, take profit, stop loss, and trailing settings. Yeah, we have the presets here. They're very simple. Basically, they're just for the quick scan now. They just limit entry, a fixed ladder, Don't look at the percentages yet because I always change those, and the risk roughly around 1%. And I change those depending on what type of entry I take. And it's the same for the short. That's just the simple preset that I use. But you will see during the backtest that I might use different types of settings. And you say you're trying to set up a backtest, but you can't get the backtest strategy tester widget to work properly in TradingView. I don't know if you mean actual TradingView, like tradingview.com, because I wouldn't know how that works. But in Ultrady itself, where you can have the backtest with full position management, all you have to do is click new here to start it, and it should work. If you don't have this widget, if that's what you meant, the widget is right here. So if you go over to the top right here, click on widgets, click on backtest, you will get the widget. Please let me know if neither of those two explanations helped you. Okay. Then let's continue with our analysis. So we have those swings. This was already from the previous time. All the trades that we made were on this candle anyway. All right, so it's the backtesting in Ultrady. So hopefully you will be able to find it using this widget, clicking backtest. If it's anywhere else, you can just drag it to the location here by simply just clicking on it and holding, and then just placing it like so. If you need more help, then you can always contact our support chat. It's 24/7 on support.ultrady.com. And my colleagues will effortlessly try to help you to make sure that you get where you need to be. Okay. Oh, auto enabled. I don't see much. I mean, is this week over? I think so.
No, that's the moment that you
Oh,
stop
that's the
backtesting.
yeah.
So
Okay.
it might
So
be
not a
not
weekly
finished
fair
yet.
value gap yet. Not a weekly fair value gap yet. Daily, what we see daily, we see a nice target on the daily. Oop. There, target.
Yeah, I think you need to go back to monthly and just go again through the thoughts on what you think about the bias, where the market is going.
Yeah, I can do that. Oh, if this.
And you can also remove the volume.
Oh yeah, we don't. Who
This
needs
is
volume?
just a little cleaner.
Who needs volume? So go back to monthly. Okay. Yeah. So
Yeah,
I said
so ignore the last candle.
Yeah. So it moved into the. It completely filled the fair value gap right here.
Yeah.
That so it's a bearish move now. So it grabbed the liquidity here, and then it should be bearish because this is still bearish. This is the correction phase. So I would say we're still looking for bearish things on the monthly. On the weekly, it confirms that a little bit. Fair value gap filled. We do have some liquidity grab here in the order book, so it could be on the weekly that we see like that this order block was filled and it's going to go up. Possible. So weekly is, kind of weekly shift though. It closed below this one, but I can't really say that this is a real swing, even though it is the lowest point of these three candles.
Yeah.
So weekly, a bit unclear to me anyway. On the daily, it's a lot clearer. On the daily, I would say that this move is quite bearish and we could see a continuation. So it might go like grabbing some liquidity there, moving there, going there, going there, and then whatever happens, something like that.
Yeah.
Maybe even this first.
Yeah, so you can mark these levels as potential target, maybe even this one.
Yeah. So that's indeed a target. And Yeah, this is also a target. Can you explain how to track possible trade opportunities when trading live? For example, when the price is not yet in a fair value gap, or when it is a fair value gap, but it didn't hit the shift yet. Using alerts, or do you have another approach? No, yeah, it's exactly that. You just use alerts. So you can use a price alert to set an alert for like this target, for example. For shifts, you need a closing. So you could set the trigger type to on close. That's not possible in backtesting, but in the normal one, it's possible. So you can have it so that that you get alerted when it closes below your target. For fair value gap entries, you can just set a normal price alert. And then when there's a fair value gap entry, then you need to look for the shifts on the 15-minute, and then you can use the trigger type on bar close on the 15-minute resolution. So do 4-hour resolution, or it doesn't really matter which resolution you use. As long as it enters a fair value gap, it's fine. And then later on, you set your shift alert on the 15-minute or any time frame that you want. So if you're doing daily, then you would set your shift alert on the 1 hour.
Yeah, and also we had in mind that feature to allow placing a position on the bar close. So this would help as well.
Yeah, that would happen. That would help if you get a clear like low point and you just want to set it up on the shift on the 15-minute or an hour. That should be possible soon. Okay, so this is that. I see on the daily, I see a fair value gap here. And that's a high time frame, bearish fair value gap. And there's another one right there. Again, high time frame, bearish fair value gap. So my thoughts would be that it might even go in here into these fair value gaps, and then we can already look for some shorts. This fair value gap was not fulfilled, so we still have the possibility even that it will take out this target and fulfill this fair value gap. Also possible, but the beauty of this strategy is that we can just react to the price, and we don't have to look for price opportunities. They will just present us. Okay, what else do we have? Nothing here. Yeah, this is nice liquidity building, but yeah, I think we're done on the daily. Let's move into 4 hours. Actually, for 4 hours, we can just enable this one so that we don't have to hunt the fair value gaps ourselves. All right, so daily and 4 hour, I would say that there is a recent correction. So we could expect something to go to the upside, but I would still favor shorts at the moment. So look in order flow shorts. And I think, if I'm not mistaken, no, this was long. Did we go long?
Yeah, the last one was a long position, yeah, because of the range.
Oh, right. That was our first and ever range trade. Also nice. Okay. Yeah. Well, we're back to where we were. Let's save it in case we do this again next week. So would you agree with the analysis that I just made?
Yeah, I mean, it makes total sense.
Great. Does it make sense for the audience? Did I miss something? Did I go too fast? Let me know. And in the meantime, I will just continue to see where this market is headed. And again, favoring shorts, we're in a fair value gap right now. Actually, we are the highest point for shorts. So actually, we could already be looking for a potential short if we see a 15-minute shift.
So one more thing I wanted to say is that if you go back to 4 hour,
yeah,
is that the one extra confirmation that I use, or like extra tool, is that you can just add a Fibonacci tool between this swing high and swing low. And usually during the correction, market hits exactly at least 0.5 point, or even the optimal trade entry zone. So this is something to look for. It's not like the concrete rule. It doesn't mean that it will always retrace that far, but if it gets there, then it's potentially reverse.
okay. Interesting. So we should look maybe for a full fill on this fair value gap. But if anything, if the shift on the 15-minute is there, then if it looks good, then we might be tempted to just take it, because we might get a loss, but then at least it's a statistical error and not one made on a bad decision, right?
Yeah.
So we get the lowest point here. We got a new low point. There we go. We have our shift actually, or almost. We almost have a full fill of this fair value gap as well. So yeah, that's nice. Now let's see what happens. Okay, we got our close, so we could actually now set up our short. So using the quick preset option that I have, we can check. Oh wow, that's quite significant. Let's switch to 4 hours. See if we can find any target on the 4 hour apart from this one. Maybe this. But yeah.
What was your entry? I missed it.
Entry is this shift.
Yeah.
And here, go in there. Target here, which is a 5 risk to 5 RR. So you could set it to this point or this point. Conservative would be this point. This would be the first point of interest. Yeah. So I think it ticks all the boxes, right?
Yeah, and also, yeah. So one concern that I have is that this was the range that we traded,
Mm-hmm.
and so this can be the deviation. But yeah, then it will be a short position. So yeah.
Yeah. Let's see. We get our fill and we get
Oh, nice.
a move. But it doesn't look like it's going to be, it doesn't look like it's going to be the correct one. No. Okay, fine. Statistical error. So that means that this fair value gap is now fulfilled. So we don't really need that. We have the daily fair value gap still right here.
I mean, when you have the 4 hour, it's not that important to keep the daily fair value gap there, since they overlap.
These ones, yeah. All right. So it technically is there. So this fair value gap is still valid. So if we can find another shift, then we'd be okay. But that shift is going to be here. So that's very long. I don't see any fair value gap in between that we could take. Oh, yeah, maybe this one.
Yeah, I think shift would be here.
Yeah, so the fair value gap, the first one would be here. So that means that our shift would be here, and that would be a 0.5% trade entry. And then we still need to see if there's a good risk reward ratio. Why? There. Wrong key. And get that one there, get that one there. And then for our target, what can we have for our target? I would say this low point Yeah, that's 3.9. It's a half. So we're there. And now, I mean, how likely is it that this will get filled? Yeah, we'll see.
I mean, I don't really like this type of entry because, like, with the inverse fair gap, because we had some kind of a slowdown in this area. So usually, when you want to use inverse fair gap, is that when you have a sudden move, like
Mhm.
this one, for example. So it was a sudden move and then the reversal.
Mhm.
But here you had some slowing down. So yeah, but yeah, then you had a quick drop.
Yeah.
I don't know. I mean,
The quick drop indicates that there's like a rejection, a large rejection here.
yeah. Yeah,
But
but
we'll see. If we get filled, we get filled, right?
yeah. I would probably skip this one just because of this slowing down before the.
Oh, yeah.
Okay. Okay.
We can get that out of our system.
Yeah, and you can
Actually,
see you didn't have a shift there as well. So
no. So we're getting closer to this half point now.
yeah,
So we have the middle line of the fair value gap as well, which is also a good point. So yeah, it does look like this move is about to be over at some point, right?
yeah, and you have a lot of liquidity at the bottom,
Yeah,
the compression.
yeah, it's building. Yeah, look at all this, like it's building. So we'll see for entry, but yeah, entry. Jesus, no, there's no entry here because this would be the entry point if this shift makes it.
Yeah.
It's insane. We can't do that. So the question is, will we have to? No, we won't have to take that one. We can take this one if it, or even this one, because shift is here. But maybe the shift will give us enough, so we can actually wait for the shift. That's the wrong one. I need to have the short, which would be here. I mean, if this gives us a 3, then it's a much more. Yeah, this would be fine. So I'm willing to wait for that. Actually, I mean, if you zoom in like that, then it seems very far apart. But if the RR is still there, then it might be just worth waiting to see if the shift is actually gonna happen.
Yeah.
Only problem now is that the high point is much higher.
Mhm.
So the RR is not there anymore now. That's my only concern. I just moved a little bit too fast in these candles because right here, this one, if we do it again with this entry, now our stop loss is here. And that means that we won't have a trade. And so in that sense, I'm tempted to do it on this one. And look for our 3 on the 4 hour. So we look for a point of interest on the 4 hour. This is a point of interest on the 4 hour. It's a little bit of a small swing, but nonetheless a swing. And with 4 risk reward ratio, I'm fine with it. On the other hand, we could just split the target and say go there as well, just to get, well, like Roman always likes to do for the bigger ones. So let's try that. What do you think? Any
I don't know.
any flaw in my?
Well, what I noticed for myself with live trading is that when I caught a couple of stop losses with inverse failure gaps, then I prefer to wait for the shifts for the proper confirmation, because sometimes you can get to how to say that, like, you start utilizing inverse failure gaps a lot and it generates just a lot of losses. but then you'll get tired of that, of losing. You'll switch to longs, for example, and then eventually it will go as you planned before.
Yeah.
So,
So yeah, what does that mean? Like, where's this line?
yeah, I would wait for this shift at least.
Okay. Okay.
I mean, if there is the shift happens, and let's say price goes down, then it will probably be some fair value gap where you can take another position.
True. Yeah, then you can get into the order flow. Even if you miss this one, then you can still get another one which might have a better entry and still the same RR. Okay.
Yeah, so there's the shift.
Yeah, the shift is there, but the RR is not there on this move.
Yeah.
That was the whole issue. I couldn't take this trade because because this candle pushed it too far, where my risk reward ratio would not be. Because if I do this now, I don't have enough. Like the only way to get in now would still be if we do this. So if we get this entry, then we can get it. That's possible. So we have the shift and we have then.
Yeah, I mean, you can try that. You have the shift, so that's one of the confirmations.
Yeah. So we can try if we can get this entry filled.
Yeah.
We could probably go. Yeah, we could probably go to the entry of the fair value gap. So in this case, we would get filled and have a 3 RR. So we would get filled now. So let me just jump back, cheat a little bit. So in this case, we would get filled here. There we go. Well, we would even get filled there, but it could stop anyway.
Yeah. Not so good as the last one. I mean, the last stream.
The last stream, we also started with a couple losses in the beginning, but not as many as we do now. Because right now we're currently how many? What did we?
21%.
We had 21%, and we're now down 4. But that doesn't matter. We're here to learn. It's a new opportunity to enter. At some point, this shift is going to this move is going to work. Again, so low like this. Why can't there be a nice swing in between?
And I think, did it hit the 0.5 now? Yeah.
Yeah, it did.
Yeah, so yeah, it's interesting. Yeah, now we can see if it reverses from there.
Yeah, so the entry that I see now would be here and there, like so, and then we would get our, because this target is just way too good to let it sit there, and then we get the crazy numbers.
Yeah. So you're not waiting for the shift this time.
No, shift is for now. Now is. I mean, I changed the risk reward ratio, or the risk percentage, but now we're getting into a far better situation. I mean, there's a lot of compression here as well. It's building. This move is building.
Yeah.
And this target is going to be massive.
Just one shift. That's all you need.
Yeah, we're there now, right? This is the shift. Closed. There. Entry.
I mean, yeah, you can take this one. I thought this one. Yeah, but you can take that one. Yeah, it would be even better. It would be like massive.
I have to scroll all the way down here. Oh no, it's a 0.5%. Still 6.
It's a shift.
Oh yeah, shift. Sorry. Yeah.
Yeah, it's a shift. It's 1% risk.
Okay. Setup.
I would probably wait one more candle to get a proper shift because it was like on the edge.
Oh, you've got
But
it.
yeah. Yeah, this would fulfill it.
And now we're getting into this territory where we need to see if there's any opportunity to go short even more on the 4 hour, that is. So that's why I'm looking at the 4 hour. So far, nothing. Might be if we get into this fair value gap, but we're going to get the profit now. Not bad. Let's see where we are.
Oh, you had. Yeah, that's nice. You had.
We're back.
The fair value gap there. I don't know if you could enter there.
Oh yeah.
It's probably too tight, too close to.
Their closes here. Closes here.
Yeah.
No entry. No entry.
It's like
Didn't miss
1-to-1.
Didn't miss anything. Hey, look at that. So all the mistakes that we made, and we're back into the profits. But yeah, I do remember you saying like, wait for this one. At least you avoid this massacre. And in all honesty, that would have been the best scenario, of course. Someone's Bernie is asking, what indicators am I using? I'm using the Smart Money indicator by Overtrading. This one, available on the Essential and Premium package. And do you have any recommendations on bots? Well, we have our bots section, and you can explore the public bots and see which ones are performing well enough for you on your exchange using your currencies and all that kind of stuff. And then you can just simply copy that bot and see if you can replicate the results. Obviously, the past trades are not guaranteed for future trades, so that's always going to be a little bit tricky. So now we're getting into this. I'm still bearish on the 4 hour. Well, actually, I'm even more bearish now on the 4 hour. Looking for this target here, maybe, or this target. Why did I not want this target? That's the first target if we can get there. And this fair value gap is now a nice opportunity. So, but we're on the 4 hour. We don't have anything to look at right now, apart from that this is a low point, but yeah. These are fair value gaps, but we're looking for shorts, not for longs.
Right? Yeah, and they're like too far. Like you cannot use these 4 hour fair value gaps for.
Yeah, they're too old as well.
For
right?
longs.
Yeah.
Yeah, it was like 2 months ago, like 1 month ago.
Yeah. So we have a fair value gap. Oh, it reached that target, by the way. This would have been a monster trade if we had that target.
Yeah.
Can't be greedy. It was already a 4 or 5 even. No, 6. 4, 5, 6. Yeah, well, we get another fair value gap right here. If we just move the candle sideways. Can you show the indicator again? Yeah, Smart Money by Overtrading. Just go to indicators and type in Smart Money, or just type in Overtrading, and you'll get that one. If you're on the Essential or Premium blend, that is. Is it possible to apply leverage to this strategy? We're currently using 10x leverage for our trades, and you may say 10x, you're crazy. It doesn't matter because we're using a risk management with currency balance where we ensure that our position is never bigger than risking 0.5 or 1%, even though we're using 10x leverage.
on some markets I use 100x leverage, and it doesn't matter. It's still like 1% loss, and that's it.
Yeah, I mean, if your stop loss is within the 1%, you can easily use 100x leverage. It doesn't matter.
Yeah. I want you to scroll a little back, like zoom out the chart, just to highlight some things. Can you hide the trades for now? Yeah, so I just wanted to show you the, like, you can see what happened after sweeping this liquidity. Market went up into correction phase, and then went down. Then we had another sweep of liquidity, and we had another slow correction going down.
If you're saying what I think you're saying is like we could even look for a small long.
I'm not saying that. I'm just saying,
No, that's
like,
what I hear you say.
you need to be aware of that. So that happens. So usually after taking out liquidity like this, you have some period of slow grinding up. So it doesn't.
So it's possible that it goes like this, and then there, and then maybe a few bits here, and then it takes out then it takes out here, and then it moves down there. So, like so.
Yeah, it's possible. But I'm just saying, like, that's what I noticed on this chart.
I mean, this move is already going the way that I just had drawn it out before in the beginning of the stream. So it's, yeah. But I mean, it's a bit risky to get into a trade here, a long trade here, because you can see this is a lot of consolidation here. And it might even form a range here because this is the impulse move and this is the correction. So the correction is not necessarily always going back up.
Yeah.
Sometimes
it does, but yeah.
How to calculate a trade using proper risk management? Yes, I will do that on the next trade. So yeah, preferably a nice move in the fair value gap would be good. Oh, another one, also fine. Oh, there we go. Get the 15 minutes. So we have this, but our shift is here. And our target is there. Let's keep those in mind. So technically the first one is here, the other one is here. Right? This changes everything. Life gets simpler at some point. Oh yeah, but you don't like the ones where the current candle is also the lowest. Well, it isn't. It isn't now, so it's okay. So this would be nothing yet. This would be shorting time. And look for that. So now to do the proper risk calculation, let's see. We need to define our point. Would you consider this a target? 4-hour fair value gap?
I don't know.
It's decent.
Does this work or not?
Yeah, it works.
The closest liquidity, I mean.
This one. Yeah, that works. Also works. That's better. All right. So we've determined our entry and our exit, right? So in risk management, it's very, very important. Risk is determined by your stop loss. Why is that? Because if you don't use a stop loss, you're effectively risking everything that you put in that position. So 100%, right? If I'm using a stop loss with a 1.6% stop price, that means that even if the price, like if everything goes down, then I'm basically recovering 99.4% of my position, right? That's okay. This is the acceptable loss. But if I want to risk 1% of my trading balance, so in this case, our trading balance is 12,000, and I want to risk 1%, that's 123 that I'm allowed to lose, right? That's 1% of that 12,000. So, but what is when do I lose 123? If I keep this fixed, this price does not change. This is my strategy. My strategy is based on putting the stop loss at this location. What am I left with in changing to make sure that I don't lose more than 123? And that's the size. So the size of my position, how much am I going to short in this case? If I go to 10, now my possible loss is $200. That's too much. Now I'm risking 1.65%, which is exactly 10% with 10x leverage. So that makes up for the exact stop loss percentage. Now that's a little bit of math. This is correct. If I do 5%, you will see that it's now half. I'm risking half. But I don't want to risk 0.8. I want to risk 1%. So the only thing that I can do is change the size. So this comes down to 6% in this case. And this means that I now have effectively 1% risk on my currency. And if I move the stop loss, you will see that this stays the same, but the amount that I'm selling changes. In this case, it becomes more because I'm risking less of a percentage. If I increase it, so I take a higher stop loss percentage, then I have to reduce my size a little bit so that I don't lose more than that. And that ultimately has an effect on the risk reward ratio. So the profit that I get back. So in this case, I'm risking 123, but I'm earning 280. If I go to down here, I'm risking still that 123, but now I'm earning 437, giving me a risk reward ratio of 3.5. So this is exactly what you need to manage. You need to manage your 1% risk, your risk reward ratio above the 3 at least. And then you can safely use any type of leverage that is not putting you at risk of getting liquidated before your stop loss triggers. That's the important thing. So I always use it at 10. 20 is also fine. 100, if you're using more than 1%, is not possible. So 10, 20.
I mean, with cross margin, then it works.
Yeah, with cross margin, it works because then your liquidation price is, depending on the margin that you have available, is a lot higher or lower, depending on long or short. Right, so let's get in. We get our fill. We get our trade on the chart. And we get very scared. Very scared. And there we go. This means that we now have a new high point. This means that we also have a new shift point, which is here. And the reason why this is now more likely to break out somewhere is because the compression is building. That does not change the yeah, it does actually. Because the shift is here. Although, would you say that's a shift, Roman, or would you keep the shift here? This is
this one makes more sense. This is better.
Yeah, I mean, this would be the entry for the other one, but yeah, arguably that would have been a mistake. So there. Ooh, that's a new high. Making the shift, yeah, to this, because this is the swing low, but this is the actual low point. So we can take the actual low point. So that means our shift is here, there, and now find any target that will give us at least 3. That's 4. That's 3. No. So here, but let's see if that's anything on the 4-hour. No. So this one is still our target. Would you agree?
I don't know.
Well, we have our shift. 1% target here. There's no target in between. There's a lot of liquidity being built, but I'm just gonna I'm just gonna go for it. No.
Yeah, don't worry, we'll come back to you.
Huh? You were saying?
It will come back to you.
There is nothing. There's nothing. No, but now. Oh, come on. No. Oh, that's not fun. No. Slightly up still. Why, Roman? Why?
Yeah, I mean, I told you that after sweeping the liquidity, it takes some time to grind higher. But yeah, but you decided to short right away the first available.
I'm not one for missing opportunities. They're statistical errors.
Yeah, I mean,
How
at
do you
some
know?
point,
How do you know when it's the right decision?
yeah, I'm not saying that I know that it is right or not. But yeah, I mean, at some point, if you keep shorting like this, that yeah, you'll be correct.
Yeah, you'll be correct one time. So shift technically here, but I prefer to have something else because this is horrendous.
Yeah,
Although the target is quite low still, this one. But no, I don't think that that's correct. But preferably we're just gonna see another. There we go. That's what I was hoping for. If you didn't see it, what happens is that now we can move our shift there. And we even have another one to our options if necessary. Ooh. And we get there
yeah, I
straight
mean,
away.
now as it get into this fair value gap, that's yeah, I think I would look for some position at this point. It's not quite the middle of the range, but yeah, it is getting close to this.
Yeah, so technically if we this is where we consider one thing because our first shift is in, so we could see, well, this is a pretty decent target actually. But that means that we can just wait and be a little bit more sure if we take this one because this is already good. And actually our target is more likely to be here. Although no, this one can be our first target. Yeah, this is fine. I'm happy to wait for this just to be sure. Yeah. Okay. That means that we can now set up our short there, set our take profit there, and I'm really liking this target, so I'm gonna do it in a split one. Yeah. Oh, not too fast. It's a one. Yeah. Check the risk. And oh, stay. No. I'm painfully laughing. Oh, another fair value gap filled. But now with a ridiculous shift, actually. So here, yeah, you know what? I'm gonna be right one day, as you say.
Yeah, when I did my backtests, I had like 8 trades like this in a row that were losses, but then I had one that covered all the losses and got some profit on top.
Exactly. This is close 440. This is yeah. So we are technically moving the shift line. I mean, we're splitting hairs here, but this is a shift line like that. Fulfill fair value gap. It is a nice one, but we don't have to because our targets are so low. Right? This is still the target.
Yeah.
These two, yeah. So there's plenty of room to wait for the shift. And there's the shift. There's the entry. Stop loss. Target. Yeah, you see, this is more than enough. Add target. Like so. What do we get to? 4.2. Perfect. I'll take that any day. It was a full shift. So.
Oh. That was close.
It was that was very close. Oh, this is the fair value gap being created. So this is not an entry point. It's always like, oh, I see, but it's not an entry into the fair value gap. But we could see an entry into the fair value gap. But we could also see profit.
Nice. Yeah, finally got one. But how did you? What was the stop loss there?
That was me.
I mean,
that was me putting something slightly
Jesus.
higher.
Yeah, because it swept the highs, I guess.
Yeah. But
So,
this is
one is higher.
This is what I like to call the schmuck margin. I don't want to be schmuck and be being left out there, because it doesn't really matter, right? If you get stopped out here, then your risk reward ratio for profit is a little bit better. If you put it really tight, then your profit gets a little bit larger. But if the risk reward ratio is fine by putting your stop loss a little bit higher, then I'm willing to do that. I'm not so strict on it.
That's a good point.
Just because this happens a lot, right?
Can you switch to 4 hour? I just want to check something. So yeah, I wonder if you would be stopped out here, then this would be technically the sweep, and then 4 hour shift, and you could even enter here on 4 hour, like on much higher time frame.
Here, shift is this one or this one?
No. I mean on 4 hour, if you would use 4 hour as your entry time frame.
Oh, I see. Here, then shift would be here.
This would be the shift, and it exactly came back to this point.
Yeah, but that would not give you a higher risk reward ratio, lower, because your entry is here,
but
it's still here.
But what I'm saying is that with this high time frame, it would be like 2.5% risk reward ratio. But with this high time frame, it gives you much more certainty that it will work out. So when you have 4 hour shift, that is much better than 15-minute shift.
True.
So yeah, I mean, just something to think about.
Oh. We're getting into double stacking territory. No, it didn't enter again. It just narrowly touched it. But
yeah, well, that's good. It means it will get there.
It gets the profit. Hey.
Nice.
So even though it's been very, very difficult, we're sticking to our strategy. Oh. Was that already? Oh, there we go. That's the fair value gap fill. Yeah. Okay, full fill. Okay, we're gonna get this. This would be a first shift. But also, if we go back to 4 hours, this liquidity was swept, like here. So we could see. Oh, this could already be the move up, actually. Another one.
Yeah, I mean, you need to see how the price reacts in these FTA areas. See, first one seems to be like not a problem for the price. It just goes through this.
Yep. Yeah. So, but then would you consider this then shorting it here? I mean, I would, because it's a fair value gap that's still in play, and we're gonna break it with a shift anytime now.
Yeah. Yeah. I mean, I was still short from here. I'm not sure what would be the target. Please, the closest swing.
Well, just on that note, it doesn't really matter, but
Yeah, I mean, from this fair value gap, I would short for sure.
yeah. We're just slowly moving. I don't want to move too fast because I don't want to miss anything better, because obviously there are better opportunities lurking around, but there isn't. So time to short. That's our stop loss. We don't need the schmuck insurance because it's already there. Then we have target here. No, not enough. 4 hour target here. Oh, well, that's a shame. We have to go for a 5 risk reward.
Yeah, I mean, it's the last trade of the stream, so
Yeah.
why not? YOLO.
Well, first we have to get filled, which is proven to be a little bit tricky. Oh, yeah, there we go. And then we get... Is it going to be the last trade of the stream? What time is it?
I think so.
Yeah. I've just been having so much fun.
There's one more stop loss. Oh no.
Oh, we might get double stacked. Shift technically here. Nope. That's a fair value gap.
Mm-hmm.
I mean, as long as we're in this trade, we might as well go out with double stop loss or double extreme profits. Might as well.
Yeah, I mean, I like these tiny touches of the fair value gap on the move down, so it usually works pretty well. Excuse me?
9. No.
Oh.
No, I would not do that. I would do this as a quick recovery.
Yeah. Yeah, it makes sense.
Otherwise, it would be super, super greedy. Oh, actually,
Oh no.
we didn't get filled. Nice.
Okay.
We didn't cancel this one because the profit was it. All righty. So we started with 20% and a little bit, and now
21.
Do you think it's 21?
It was 20.99.
Yeah. Okay. So 21%. So what do you think it's now?
27. No. It's like, yeah. Plus 10%.
31. Nice. That's amazing. With only a couple of good trades, because yeah, we had quite a few losses, right? 1, 2, 3, 4, 5, 6, 7 losses. And yeah. Oh, that's from the beginning. 1, 2, 3, 4, 5, 6, 7. Yeah, 7 losses still. And then 1, 2, 3 profits.
Yeah, that's good.
Yeah. Nice. Whew. That was a heavy one. It had a lot. It had perseverance. That's the one thing, right? It's the perseverance. So we had these moves correct. So if we go back, so the move that I drew in the beginning, it was kind of right. right? So we're moving to these targets. So it behaved in that pattern that we described it. But timing the entries was just very, very difficult. Very difficult. And could we have avoided this? Yeah. And the ways to have avoided this was this one. We just took the first fair value gap, and we could have waited for the better fair value gap, and then we would have had one loss instead of 3. In this case, we could have waited for the 50% Fibonacci range, and then we would have had
and the shifts as well, because you traded a lot of inverse fair value gaps.
True. Yeah. True.
It's quite risky.
Yep. That was quite risky on my part. I do apologize. But that's why we do these backtesting sessions, so that we can learn from our mistakes. And then, okay, so next backtesting session, should we then say, think really, really, really hard if you want to do a fair value gap entry, inverse fair value gap entry?
I need to think about it, like how to approach it better.
Yeah.
Like usually it works well when it is an order flow. So when you have a clear entry and then price just moves down, like let's say this, if you stop for a second. So here you had like this slight touch of the fair value gap. So that would probably, this is a good way to try the inverse fair value gap.
We might have got fill if we did that. Yeah. Might have gotten the fill here.
Yeah, I'm not sure, but maybe.
Well, we can never be sure. We can only backtest and try it out. All right, that's it for today. Tomorrow we will have a market overview, right?
Yeah, there is a lot to talk about.
All right. Well, make sure that you subscribe to the channel so that you get notified if we do. And otherwise, you'll get notified through email if you subscribe to Overtrading. You get Discord, Telegram. It's posted on social media. So they're already scheduled on YouTube, so you can just see when we're live next. All good stuff. Thank you, Roman, for this support again. And thanks everyone for watching. And then we'll see you again tomorrow. All right, everyone.
Thank you too.
Bye.
Goodbye.